Hello and welcome to this October 21st, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're taking a look at a rather large healthcare company, Johnson & Johnson, ticker symbol J&J. This is about a $175 billion market cap company. As you can see from this chart, this is a one-year chart. The stock from over the last year really spans from about $56.50 up to about $65, and you can see here just since the end of the end of August, we have run from $57 up to $64. So really spanning almost the entire area, really, from the 52-week low, which was set back in July, to the 52-week high, which we saw back in April. So the stock's made a really big move over the course of the last 7 to 8 weeks or so. But notice on this most recent high, as we've continued to push higher, that the MACD is starting to show a little bit of weakness. So as prices keep moving up and we're getting closer and closer to resistance, major resistance level, we're struggling to maintain that bullish momentum to the upside. So it's a little bit of a warning sign. Also, the volume trends have started to turn a little bit more negative. We haven't seen much in the way of big volume supporting the move to the upside, and yet a couple of the down days that we've seen here in the last couple of days, you can see that there's been a little bit of a spike in the volume. So we've got a couple of little warning signs. I mean, we still have the uptrend intact, but these are just warning signs that suggest that perhaps we might be nearing the end of this run to the upside. As we get closer and closer to this 52-week high and a major resistance level, that becomes another area where the stock could turn as well. So we like short entry really from the current price up to maybe 64, maybe even as high as 64.50. Chances are if it breaks out again, then the negative divergence is going to remain in play. The thing that would bother us about a short position is if we get this breakout above 65, the volume picks up, the MACD turns back to the upside. That's when we want to make sure we're out of a short position. So we do think from a risk-reward standpoint, it makes sense near the current level, maybe up a little higher, to consider taking a short position. If it makes the breakout, then you get out without a whole lot of damage. One other point here, you can see that the RSI has been above 70 for the most part over the last month. Same thing with stochastics in the 80s and 90s for the last month. So we've got a stock that's been very overbought for a month or so. Really could just use a pullback, nothing horrible. But when we see these negative divergences, what we look for is a 50-day test. You can see that the most recent breakout here in September actually took out this high around 60.75, and if you go all the way back to February on the way down, you'll see that this 60.75 area also acted as support back then. So we held as support, we bounced, then we came through 60.75 on some pretty good volume, and then came back up and failed at 67.75 before dropping back down again. So it also makes sense from a price perspective that on a breakout above 60.75 that would be an area of some pretty good support. And notice that the 50-day is down at 60.56, very close to this price support level as well. So with the negative divergence, that's what we'd be looking for, maybe a couple dollars, maybe $3 back to test the 50-day moving average. And then, assuming it did that, volume was okay, the MACD gets down closer to the center line, that might be a better chance or better opportunity to be on the long side. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.